Hi there, Carmen Badan here with Real Pro Realty with another episode of Carmen Daily. Today I'm going to talk to you about the difference between mortgage pre-approvals versus mortgage pre-qualifications. So let's say that you decided to purchase a home within the next 2 or 3 months and you go to your lender and you tell them that your credit score is so-and-so and you have this much money in the bank and you made this much money last year and this much money the year before. The lender may go ahead and say, oh, okay, well, here's what I'm going to do. I'm going to write you a letter and I'm going to say that you are pre-qualified for $300,000 loan on a $350,000 home. You put $50,000 down. Your interest rate is going to be 4.25%. It's going to be a 30-year loan with a fixed interest rate, and so on and so forth. So maybe there's other terms in there, but this is the majority of them. And you're going to be happier than a lark, and you're going to go out and start looking at properties with your real estate agent, and you're going to find the property of your dreams, and you're going to submit an offer. So far, so good, right? Well, here's the thing. If you run into a savvy seller or a savvy seller's agent, so the real estate agent who represents the seller, they may come back to you with a counteroffer. And one of the things they may say is, we will work with you provided you show us a pre-approval letter. So after scratching your head, you're going to go back to your lender and you're going to say, well, I need a pre-approval letter. And the lender will say, oh, okay, well then bring me your tax returns for 2 years. Bring me 2 months worth of bank statements, pay stubs. Let me check your credit score. In fact, fill out this form here. And I'm going to go ahead and verify all these items. So I'm going to verify your credit score. I'm going to verify your income, and I'm going to verify your assets. So in a few days, the underwriter for the lender will actually give the green light, and you will be receiving a new type of letter. This time it's going to be called a pre-approval letter. It's going to have about the same terms on it, but it's going to have a word in there that makes a whole difference. The word is verified. So this gives the seller peace of mind that you have gone through the process of approval, which means the underwriter has already verified your credit, your income, and your assets. Without this pre-approval letter, you don't have such a strong offer. The pre-approval letter is the closest you can get to being a cash offer, and I promise you it gives you a better chance to get a better deal on the property. So go the extra mile, get yourself pre-approved, not just pre-qualified, but be careful. Your pre-approval letter is not money in the bank. Your pre-approval letter actually will have some conditions that refer to your credit worthiness, not just the property appraising and so on and so forth, but your credit worthiness. So you as a borrower will have to maintain the credit worthiness that you had the day you applied for that loan, for that pre-approval letter. And some of the things that I would like to share with you that a lender friend of mine shared with me a long time ago, some of the don'ts, right? So remember these don'ts. Do not apply for a new job. Do not apply for new credit, so extra credit. Do not consolidate debt. Do not make large deposits without having a paper trail. And I think that's it, right? And one of the things I wanted to remind you, do not buy a Ferrari before the closing date. You can buy it afterwards, but not before closing date. I hope this helps you with the difference between pre-approval and pre-qualification. If you have any questions for me, don't hesitate to call me. My cell phone is 239-404-7576, or you're going to find all this information on my blog at realestatenaples.com/blog. And I am looking forward to working with all of you. See you tomorrow.